Manish, wonderful to see you. Sam, welcome. Welcome, welcome both. Take a seat.
Nice hat.
So we began all this discussion about responsibility of technology and ethics in technology. And I wanted to get a take as arbiters of people who are coming through to the capital markets and looking to be selling shares. Manish, you obviously have a sidecar which invests in companies as well, in tech companies. Are you focusing on the ethics of these companies as they grow now?
I think more and more, I guess one of the phrases you'll hear is tech for good. And I think there's a lot of new incubators, new tech funds that are set up to invest in technology that's enabling some societal change. And it's something we've been tracking for, I guess, the last 2 years seriously. It is, we have a tricky balance because we're entrusted with the money to drive the best possible returns. But at the same time, we have to see the societal impact as well. And I think we're now getting to the interesting point where there have been enough companies seed funded that are driving some really interesting change, that they've kind of passed the risk hump for us, where we can get involved and start helping them raise potentially significant rounds of capital.
Sam, when these companies no longer need to go to VC money, but can move on to the public markets, is that something that you're hearing investors discuss or think about? Is this company I'm about to put money into for good?
On the public markets, it's probably something that has only just started.
Larry Fink.
Yeah, so that statement, I think, was quite a surprise from the investment community. That was such a big statement. We haven't seen it in terms of what they're looking for in investment propositions. It's still very much the bottom line and about growth. But our private division, where we raise a lot of private growth capital, that's starting to see it much more. So where the investors are, they're more bothered about purpose, and there is social responsible money that is going into that area. I think the interesting thing is there's still a lot of social responsible money out there that people think they're investing into, but it appears to be it's still a bit of lip service to that. That sort of real ethical purpose. Why is it important? Real conviction investing. And we're just trying to do our first deal at the moment in real social enterprise. And it's hard.
Fascinating the way in which the dialogue is changing. But what I think is here to stay is that London's made its mark when it comes to the technology area. We are starting to see companies getting to the scale and the size where we hope the likes of Funding Circle will eventually come to the market and go public. We've had Spotify in Europe, which, Manish, was a company that you invested in earlier on. Congratulations. What do you think about the trends in Europe at the moment? Where are they leading the charge in terms of the verticals within technology?
I think it feels like Europe's leading the world in some aspects at the moment.
Tell Silicon Valley that, but...
But I think if you go to the Valley's definitely looking at Europe, and a lot of the funds have seen some of the problems that have occurred in the Valley. Salary costs have got too high. There's a lot, the corporate culture is problematic at the moment. And everyone's looking at Europe as creating these companies like Spotify. I mean, creating a startup that then hits $25 billion in value and has disrupted an entire industry. And that's a Swedish company that scaled out across Europe. And I'd say London is creating these sorts of companies with that sort of velocity now. People have been watching the Funding Circles, the Zooplers, the Just Eats for a while. But I'd say almost it's the cohort below that where we see some absolutely amazing companies where the growth rates are phenomenal. And I think the missing piece has been access to capital and talent. But a lot of the US entrepreneurs are actually coming over here now. And a lot of the US capital is coming here. So I think the biggest challenge for Europe is we've got to stay humble. I think egos, Silicon Valley was the example, right? The entrepreneurs became rock stars. They could dictate any terms that they wanted, and the egos got ahead of themselves. I think one of the key things in Europe is the entrepreneurs have to stay grounded.
One thing that might ground the odd entrepreneur, or indeed company that is growing bigger, is Brexit, of course, has become something that many people have to discuss. And interestingly, Sam, when I speak to venture capitalists, thus far they think that it hasn't made much of an impact, particularly to the amount of interesting companies coming through. Yep. Do you agree?
Yes. I mean, we work with a lot of small, medium-sized growing companies. They all, if they are impacted, have a plan. I think what we see is the numbers that come through in funding just continue to rise. So 2017, 2.5 billion went into UK tech in the VC space, the biggest figure ever for foreign investment into UK growth companies. All the numbers are just coming through, and Brexit isn't putting off overseas investment. West Coast America, it's just gone over $1 billion invested in UK tech. That's the highest it's ever been, backing more than 70 companies now. All the investment is happening.
Types of technology companies that are exciting you?
So of the 2.5 billion that's been invested, nearly 1.5 is fintech. So that's still where London leads. And that's a lot of, you see Funding Circle looking to IPO. We see that sector as probably the first that will look to the public markets and is probably big enough to go to the public markets. But the next biggest sector is AI. So that those two are our sort of biggest on the watch list.
Manish, it's interesting that when you start to look at the numbers, yes, London has been leading the way in terms of amount of venture capital raised in the city compared to the other hubs of Paris and Berlin. But Paris did beat us in terms of the amount of companies that got funding. They had more number of, and there's talk that maybe Paris will potentially start to inch ahead in terms of actual sheer amount of capital. Is that a concern? Is it that all boats rise? Where are the hubs that you're keeping a keen eye on? Because I know that you're across Europe and you're global.
So I mean, we're seeing Germany is probably the fastest moving market at the moment. And I think we track how many companies hit this kind of magic $1 billion level. So they've really executed well, usually spanned out across the globe. And Germany is growing 3 times faster than anyone else. UK is still out in front, but I think there is some concern with some of the entrepreneurs about, they have to think, if you're a European startup, you have to think, if you're going to compete with the US players and the Asian players, you have to think about Europe as your home market from day one, and then thinking about how to go into Asia and the US very, very quickly after that. And I think anything that can slow down the movement of labor or the culture or thinking about one market is tough, because it is hard, right? We've seen these companies, the Farfetches of this world, Spotify, when you're scaling out across the UK, France, Germany, Scandinavia, Netherlands, lots of different cultures, lots of different languages. I think we're only just starting to really get people that have been through that cycle, know how to keep it as one culture. Anything that can disrupt that is a major concern for the CEO. So I think it is something we've got to really deal with in the movement of labor.
Why do you think Germany is managing to scale at a faster pace?
I think Berlin created a little bit of the Silicon Valley effect in the early days. They became very collaborative, sharing a lot of the knowledge, a lot of the talents, and really created this Keiretsu effect where everyone just shared access. And then it was helped by super low rents, very cheap city, and became very cool overnight. So it attracted a lot of the talent.
Sam, when you're finding new pockets of capital to be putting into work here, are you finding, we were hearing from Manish, that a lot of US money is getting interested, and we've seen a lot of funds raising money, the likes of Eight Road Ventures, the likes of Octopus Ventures, seeing money coming from new areas. Are you seeing new interesting areas wanting to get into tech, wanting to access that when they come to the public markets?
I think it's not just tech, it's across the whole sort of entrepreneurial growth space, because I think we've been very focused on startups for many years, and we're 3rd in the world, that's great, but we're still only 13th for scale up. And there's so much energy now shifting from not just startup, which is a great ecosystem, to scale up, which means you've got a lot of opportunity, a lot of people want to come and fund. There are all sorts of pockets of investment opening up all the time, and that growth is not just tech, it is all through that scale-up UK economy piece.
So I've asked it for each of the panellists. What can you are change makers? What do you want to see happen now to ensure that London does scale up in the way that you hoped it to continue to, and Europe remains leading the way and interesting the US? What one thing, Sam, would you like to see that you could potentially help with the foreseeing of?
I think our key focus is this: how do we improve being 13th in the world for scale-up? Because scale-ups do provide more jobs, more tax revenue, and that's how we're going to grow out of the problems we might have. So anything we can do to support that, and our part in that is to make sure as many companies as possible that are in the scale stage know about the whole financial landscape in a totally jargon-free way, because that is a really uneducated part of the market. It's too complicated.
Too many acronyms, that's for sure. Manish, what about yourself? How do you see being able to incite change?
I think the hardest thing is attracting the capital, and I think we've done that in a massive way. So SoftBank have obviously opened up their $100 billion funds. The US funds are coming out of opening offices. I think the only thing that's concerning them is just making sure with the negotiations that it's the movement of talent. I think anything that can scare off the investors or the entrepreneurs there will have a bad impact in the UK.
So we want free-flowing people, not just capital, and we want them to be educated as well. It's been wonderful speaking to you, Beth. Please do give it up for Sam Smith from finnCap and Manish Madhvani from GP Bullhound. Thank you.